Welcome back, everybody, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. Today, I'm just going to shoot straight from the hip, and I'm just going to talk about a topic that's pretty complicated, but I'm going to try and boil it down for you to make it as simple as possible, and that's the Evergrande situation. I'm going to explain first what Evergrande is, second, the potential implications across the globe for the financial markets, and then finally, I'm going to bring it home into the cryptocurrency market. So first, what is Evergrande? Evergrande is the second largest real estate developer in China, and they have a ton of money and debt. They are very popular in China. So to the point where their debts or their REUs or their bonds are basically like cash. They could be exchanged. They're almost like a currency. But they have a large outstanding debt of about $300 billion. That's been documented. I think there might even be larger than that. But right now, they can't service their debt. They can't even pay the interest payments. That's a big concern. This is why they're talking about like a Lehman Brothers or an Enron 2008 type event, but in China. This time, though, it's bigger because Evergrande is tied globally, because what they do is they have what's called, they sell bonds. In the way that companies work and the companies raise funds, a lot of good companies, especially ones that with high ratings like Evergrande did until now, is that they would issue their own bonds, and there would be a bond market. And there's a lot of money is raised through bonds. A lot of municipalities and counties and states in the United States, they raise money this way by issuing bonds, and then people buy these bonds. And the way it works is that, just say I'll make it simple. There's $1,000 bond, and let's say it's a 10-year bond. You buy the bond for $1,000, and let's say it's a 5% coupon rate or interest rate, whatever they want to call it. So you will get payments of 5% of the money that you put down. So you bought it for $1,000, you'll get 5%, which is $50. You get $50 a year for 10 years, and you get your $1,000 back. So you're basically buying those interest payments, then you get your money back. That's for high-rated bonds, and there are bond rating companies that issue. That's where you hear AA, AAA, double B, triple B. All these different bond ratings are based on their creditworthiness, their scores, and the rates and the discounts and so on. Like the value of that paper goes accordingly. So a AAA bond, typically that's like a state bond or a municipality bond, that ones that are collecting taxes, so they're not going to default. So that's where they typically get from. Now, corporations will raise funds rather than selling their stock, they'll sell bonds, which is basically raising capital, especially a real estate developer like Evergrande. So Evergrande is raising money by selling bonds out in the market. And there's all these bonds, which are considered commercial or corporate paper. Now, the bond marketplace has bought this paper, and who owns this paper, we don't know yet, but we think that there's lots of exposure across a number of sectors. So now anyone that owns Evergrande paper, if Evergrande goes belly up and they go bankrupt and can't pay on their debts, those bonds become worthless, or basically just collector's items that really don't mean anything, but the value is gone. So that brings it all back home to crypto. How does this impact the crypto market? Obviously, if there's a mutual fund or a bond fund or whatever is invested in the Evergrande, they have Evergrande exposure on their books, they could take an impact, and that could be concerning for whatever fund that is. In the crypto space, there's one particular coin or project which has documented now that they have exposure to commercial paper, and that's Tether. Tether has documented, because they were recently audited in the last couple of years. I think it was last year even. And I think Coin Bureau did a nice video on this. I will try and find it. Can't promise it, but I will look for it. And they went through the entire documentation, because for years, like literally since I started in crypto 5 years ago, Tether's been around as a stable coin. That was the stable coin that people made, and there were pairs everywhere on all these different exchanges, because that's how you cashed out in the crypto world. You sold Bitcoin into Tether, or you bought stuff with Tether, and that was basically the crypto equivalent of $1. And the statement that from Block One that created, I think it's Block One. I have to double check, but anyway, the people behind Tether said that there was $1 for every Tether that was out there. Now we know that's not true. We also know that the audit report just showed that the cash on hand is pretty light. It's less than 10%. But what is heavily on hand, if that's even a phrase, they are exposed 50% of their holdings that back up the value of Tether is commercial paper. Now, why would they do this? well, two things I want to bring up. We don't know what kind of paper it is and why would they do this. So I'll start with why would they do this. Imagine you had $1 million and you could say, I'm going to put $1 million behind this dollar for dollar. Okay, great. Or you could go out onto the discounted commercial paper market and buy B or C grade bond notes that are selling at a discount and buy $1 million worth of paper for $100,000. So now you're getting 10x return on your money because you're buying these bonds at a discount. Now I'm making those numbers up, but clearly the idea is conceptually the same. You're buying something that has a face value of $1 million at a discount. So rather than investing $1 million one for one into backing the funds, you're throwing money at bonds that have a face value that will back it up, and you're getting your dollar goes further. So that's what Tether has done with 50% of the money that's allegedly backing all of the Tether. And they bought commercial or corporate bonds. But the problem is no one knows what companies or corporations they're exposed to. Now, Tether, it's not the most reputable stablecoin. I'll say that. Don't want to trash it too hard, but a lot of people will say, a lot of cryptocurrency experts and influencers will say, including myself, I would avoid using Tether unless you have to, because sometimes you have to exchange in and out of it, and that's how you buy stuff, or that's the only place that's smaller changes. That's the only stable coin they have exposure to. And I understand you use it, but I say if you have to use it, I use it as a pass through. Don't stay in it. So Tether is the it's borderline third or fourth largest crypto in crypto space. I just looked right now. The market space as of today is the 27th of September, which is so it's $1.9 trillion is the entire crypto space. Both Cardano and Tether are neck and neck at $70 billion, or roughly 4% each of the entire crypto marketplace. So the exposure here is that Tether could really suffer a major black eye once again, and say like, okay, well, our corporate paper that was 50% of our backing now is worthless. So now that $1 valuation should really be 50 cents because half of our backing is now gone. That's worst case scenario if they were entirely exposed to nothing but Evergrande paper. But it's a scenario that could play out, or 50 cents to $1 is where their valuation could drop to. Now there will be a gross overreaction to this because Tether is only 4% of the entire market, but Tether could be like, no one wants to use it anymore. So now everybody's kind of scrambling around, what is stable now? Where do I put my funds that are on the sidelines? So that could create a buying opportunity, could create a temporary dip as people get reacclimated to the fact that Tether could be washing out to some degree. But I just wanted to put this out there to say, the reason that Evergrande could ripple back to all the different areas of the economy is because whoever has Evergrande paper, the bonds could get hit by this exposure if Evergrande goes belly up and they can't repay their debts. So their bonds are become worthless, and they could go all the way into the crypto market via the Tether vehicle if that's what they're holding. And rumor has it, and this is coming out a lot, and a lot of people are talking about it. So where there's smoke, there's fire tends to be. So be forewarned. But if Tether starts going really strange, understanding that it's only about 4% of the holdings in crypto, but it is a lot of exposure to trading pairs on exchanges. As people have said before, don't necessarily believe the prices or the volume or whatever the exchanges are telling you. So there could be easily be a scenario where this is an overreaction, and it could be a good buying opportunity. As always, not financial advice. I'm not clipping that in today, but making sure that everyone understands it's in the description always. This is not financial advice. This is just one guy talking on the internet, sharing his opinion. So I hope that it clarified things for you on the Evergrande situation, how it ripples through the economy. It can get back to crypto. If there's any questions, please leave a comment. You leave a thumbs up, like, share this. I really appreciate growing the network. We're slowly evolving this channel. I'm on the path to 1,000 subscribers, which is great. That means monetization for the channel, but mostly I just want to share the information. So I'm sharing the information now. Share this with other people. Get this out there. Start a dialogue about this in the comments. And once again, thank you for watching. I really appreciate it. Give me a like, subscribe, thumbs up. And for today, I'm just going to wrap it up, close the drawer on the bureau, and I'll see you next time.